afternoon, and thank you so much, everyone, for joining us for this webinar on real estate investing with an old 401k. And when we say old 401k, we're really talking about any old employer plan. So you have the ability with an old plan to roll it over into an IRA and make investments of your choosing. So we'll talk very specifically about the real estate investments available to you when you self-direct your IRA. If you have any questions, please go ahead and type them into the chat box. We'll definitely be answering questions through this webinar, but we don't answer raised hands just because we keep everybody muted. So go ahead and get those questions typed into the chat box. My name is Larissa Green. I'm with Advanta IRA. I've been with the company about 7 years, and joining me today is my partner in our Atlanta office, Mike Ventry. Hey, Mike, how you doing?
Great. Thanks, everybody, for coming out.
So as I mentioned, we have an office in Atlanta. We're also in Largo, Florida, but we can help clients nationwide. We even have a few clients worldwide. We are a self-directed IRA administrator, meaning that we hold private investments that our clients choose themselves. So we sell no investments at all. It's completely of the choosing of the account holder. So if you have an investment that you'd like to make, basically you come to Advanta, let us know, and we help you make sure it gets titled properly in the name of the IRA, and we do your record keeping for you. We have actually this number on the slide there has gone up. We have just under $1 billion under management and 5,500 clients nation and worldwide. We do not provide any tax, legal, or investment advice. We are here strictly to help you with your self-directed IRA account, but I always encourage people to go ahead and ask questions. If it's a question that we can't answer, we have professionals that we can refer you to that can help you with those questions. We do webinars like this one all the time. All of our learning center videos, webinars, and the ones that we do live at our local offices are always no cost, no obligation. So you're always welcome to join us for those. And if you're curious as to other webinars that we've done, you can check us out on demand or on our YouTube channel where we archive all of the webinars. And if you're curious, you'll also get the recording to this webinar. We'll send it out probably tomorrow to anybody that registered. So if you have to cut out early or you join us later on or you want to review the content again, you'll be able to do that. We have the 2 local offices do have lunch and learns where you can attend. So if you're local to us, you can always join us for those. We do them about twice a month. And then webinars, we just about do them every week. And with both formats, we invite guests to talk about what they're investing in or cover and answer any questions that our clients have, maybe from attorneys or CPAs. And so those are great resources for you guys. Self-directed IRAs are very unique in the investment arena because what we hold are private investments. So that can be anything from, real estate, which is the most common investment we see that we'll be talking about today, all the way down to something more simple like just private stock. So private stock in banks or restaurants or hedge funds, anything like that. But we do not hold anything publicly traded. And self-directed IRA administrators, there's really not a whole bunch of us out there, and self-directed investments make up for less than 4% of all the investments we see. Mike, why do you see people use self-directed accounts?
Well, it's a different source of capital, obviously. A lot of people we talk to have been, taking money out of their 401ks as a distribution and paying the payroll taxes and then flipping houses or, making investments and then paying, capital gains taxes. So it's a great way to use that extra source of capital without paying the taxes. And the gains, accrue inside your IRA, tax deferred. And then you don't have that shock right now, especially a lot of us that are watching our 401ks go up and down every other day and stocks going up and down every other day. You have a lot more stability than you would on the stock market. What kind of plans can you fund with your old 401k? Pretty much any qualified retirement plan, including another 401k if you're self-employed. We call it the solo K. So not only can you fund, IRAs, HSAs, ESAs, but you could open up a self-employed solo K, which is for people without employees, maybe a spouse or a business partner. These plans are all the same as your regular qualified plans. You can make your contributions to them. The same limits and rules apply. The only difference really is what is your IRA holding as an asset. And in this case, it's alternative assets like real estate or mortgages or gold. Different types of employer-sponsored plans. You have your 401k plan, and a lot of your public educators, teachers, nonprofits have 403bs. There's 457s. Your military have TSPs. A lot of times the military has two types of TSP. They have the pre-tax, which is like a traditional IRA, and then they have the after-tax when they are in wartime service. So, and then you have pensions, qualified pensions. Not all pensions can be rolled into an IRA, but a lot of them can.
And we like to list the different types of employers plans that can be rolled over just very simply because people aren't aware, and sometimes people don't see, their type of employer plan on the list, and so they assume that it doesn't apply to them. But in most cases, your employer plan or your pension plan can roll right over into an IRA once you've severed ties with that employer. If you're currently employed, that is something that you would have to check with the plan administrator on, because they will make the rules as to what, whether or not you can do what we call an in-service rollover. So if you're still currently employed, you are going to have to check with them and find out if that's something they allow. But again, if you've severed ties with that employer, then it's definitely something that you're going to be able to do.
That's an excellent point. I used to tell people if they were still employed in the plan that they would not be able to, but a lot more recently, more of your plan documents are allowing for it, so it is better to check to be sure. Employer plan accounts with Advanta, we have that individual 401k, the solo K we call it, where as the plan administrator we're providing the record-keeping services, paying the invoices for your assets, the expenses, issuing checks, and then there's the do-it-your-own plan where you're basically just leasing our plan document. You have to have a 401k plan to have a qualified 401k plan. So you can lease our plan document and go open up your own bank account for the plan, and then at that point you would be doing your own administration and record keeping as the manager of the plan, paying the bills, writing the checks, doing all the record keeping. And then if you already have a 401k plan that's self-directed, you can have Advanta act as a third-party administrator to hold more alternative assets and do the record keeping for those services. A lot of times we see that when your real estate investors will have maybe legal advice to create another barrier between their assets and the plan by using a third-party administrator. So that is advice that they've taken, and we can definitely provide that service for them.
Another thing you can do, and it doesn't happen that often, but if you're currently employed, sometimes it works if you work for a smaller company. You can go to the trustee of the plan and ask if they would allow a sub-account. So we can hold a sub-account for you where it would still be titled in the name of your current employer's plan. So, Advanta 401k plan, but it's a sub-account of that plan where you can self-direct a portion of your funds, and what we do then is report the statement annually back to the administrator for that 401k plan so that you do have a portion of your assets self-directed, and then of course another portion still engaged in all the investments the 401k plan provides. And that might be a way for you to kind of do a workaround to a plan that won't allow you to move funds from it while you're currently employed, if they would allow that type of plan. And people ask me about that. Again, it's going to be up to whether or not the trustee and the administrator will want to allow it. And we typically see that when you're talking about a smaller company. So you have the ability to go to the trustee of the plan and ask them if they would permit that.
Exactly. So how do we fund these accounts? How do we get, our old 401k funds to our new self-directed IRA? Well, if you have an IRA already, it's a custodian transfer. You can do it unlimited times a year. There's no tax or penalties, no reporting needed. They're unlimited. If you do have one of those old employer plans, that's called a direct rollover, where your old 401k or employer plan administrator is going to make out a rollover check made out directly to your new IRA. And that's why it stays in that tax-deferred, tax-free, no penalty status. You're not actually personally taking possession of the funds. It's going from one qualified plan to the next. And you can also do that unlimited times a year. It's free. There's no reporting required and no penalties.
So we like to kind of give everybody an idea of the types of investments we see. And this is by far, not the list of assets allowed in a self-directed IRA. Really, the sky is just about the limit, with the exception of life insurance and collectibles. Those two types of investments are not allowed to be held by an IRA, but outside of that, you can make just about any type of investment. And so if you have an idea for an investment, give us a call and we can talk with you about that and whether or not it's allowed in an IRA. But what we like to do instead is kind of give you an idea of what we see people making investments in on a regular basis, so that you have an idea of what is allowed out there. And when we teach classes, me and Mike, we teach classes to, sometimes 20 people, sometimes 100 people. So it just depends on the audience. But I always say that, we could probably go around the room, regardless of the number of people we're talking to, and come up with an investment strategy, and it's probably going to be something you can do in your IRA. There are a couple of rules as far as who you can deal with when it comes to your IRA, but outside of yourself and your family member, as long as you're working with some non-disqualified third party, as the IRS terms it, it's probably an investment you can make. So real estate assets, again, the most common investment we see. We have about 30% of the investments here at Advanta are real estate, and although that doesn't sound like a lot, that other portion of investments makes up for all different types of investments, and there's just no asset that we hold as common as real estate. So rental property, and we like to put up here commercial and residential, so you kind of get the idea that, again, it's an investment of your choosing. I don't see that much commercial property. I'm not sure if that's maybe because it's a higher ticket item. Sometimes we see partnerships formed for commercial property, but I do see most of the time residential property. Is that kind of what you're seeing too, Mike?
Yeah, unless you're talking about several people pooling their funds together, to get into shopping centers and apartment complexes and senior assisted facilities. Most of your individual people are, single family, maybe a duplex or a quad. That seems to be, and then about the same percentage of people are not just buying, but they're loaning money, acting as a bank. Their IRA's holding the mortgage. So it's a pretty good mix of buyers and lenders in real estate, I see over here.
Yeah, I agree. In residential, I always say whatever your strategy is. So if you're a full-time real estate investor and you like to buy 3-2s, well, you can do that in your IRA. Or if you prefer to buy condos, you can do that in your IRA. Typically the investment is a cash investment. And so sometimes, I know there's restrictions with condominium associations and so on and so forth, but you are looking at buying typically in cash. Now, I say typically because there are some other strategies out there, but most of the time that's what we're seeing. I also have up here rehabs and flips, and I like this example because it just kind of goes to show you that there's no time frame that you have to hold a property in the IRA. So, when you're talking about something like a 1031 exchange, there is an amount of time that you have to hold the property. And if you're talking about long-term or versus short-term capital gains, then again, you're looking at some time frame. And since the IRA doesn't pay capital gains, it's not subject to those limitations. So if you bought a property today and you found a buyer for it tomorrow, then that is something you can do. And once the funds are received by Advanta, you're ready for the next deal. And so, that's a great thing about a self-directed IRA as far as, not paying the capital gains taxes and being ready to go with a cash purchase. You can buy raw land. This is a great example that shows you don't have to have constant income or earnings on a property or any investment, so to speak. So, if you buy raw land, you don't have to have rental income on a monthly, quarterly, or yearly basis. You just want to keep in mind that you do need to be able to cover any expenses for that investment directly from the IRA. So that's very important. And we're not going to talk too much about the rules during this webinar, but you should definitely check out another webinar or get in touch with us if you have questions on the rules. But you want to keep in mind that the IRA does pay all of the expenses and receive all of the income. And that being said, if you buy raw land in an IRA, what is the expense that immediately comes to everybody's mind? Property taxes, right? So you do want to make sure that you have money in that account to cover the expense of the property taxes. Now, maybe you can make an annual contribution or move money from another account over to cover that annually, but that is something you want to consider. We have private REITs up here. A lot of people are invested in real estate, so to speak, in the stock market, and they're usually engaged in something that's similar to, a private REIT. But if it is privately held, it's something we can help you with. Again, condos are up there. We have people invested in things like mobile homes and mobile home parks. So it could be, just that individual, or, they own the land and some of the mobile homes on that land, and they lease out the mobile homes, and they have land leases for that mobile home park. So we've seen that done. Duplexes, and as Mike, mentioned, it can be multifamily to any extent. I also have people investing in tax liens, and if you're, in a state like Georgia where the tax lien converts to a tax deed, you have experience with that, or like here in the state of Florida, you're actually holding the tax lien, and then at some point, if you're not paid off on that lien, you can push it to auction. But so, check with the state that you live in and see how those types of investments work. But here at Advanta IRA, we definitely see a lot of people investing in things like tax liens, and the great thing about that is that you don't have to have a whole lot of money to get started in that type of investment. You almost get to decide how much you want to spend, and then, of course, realize those returns.
We've got some great webinars already on the website with the guest speakers about how to use your IRA for tax liens, that you can get a wealth of information for free. They're an hour long, and I recommend people start there.
And that's a great point. So if you see an investment up here that you're thinking about doing and you're just not sure how it works, as Mike mentioned, we have the tax lien webinar, but there's a whole lot of webinars there based on all different types of investment strategies, and we just did one on private lending and wrap loans. So those things are all accessible through our on-demand site and also through YouTube. So you can search Advanta IRA in YouTube and find all those great webinars that we've done. We have up here also mortgage notes. So if you don't particularly like to deal with tenants, termites, and toilets, you could go with a mortgage where you're lending money and it's secured by real estate. And I think this is an interesting concept because if you think about it, it's almost like having a CD at a bank, except for it's secured by real estate, and you get to determine the rate at which your IRA is going to grow. So when you hold a mortgage, you're going to be the bank, as we like to say, and determine the interest rate, the term, whether it's interest only or it's amortized. All of those things are going to come into play, and you get to make those determinations. I also have up here assignments. So we've seen people do assignments of real estate contracts, and something that we don't have up here that's longer term is an option. Option contracts in real estate, we've seen those. So like I said, there's just so many things out there that you can invest in. And as we go to the next slide, you're going to see the other types of alternative investments that aren't real estate or necessarily real estate based. So LLCs, and typically when we're talking about LLCs, the first thing that comes to my mind is a single member LLC or checkbook control. So when a an account holder prefers to have checkbook control over their IRA, that's typically through a single member LLC. Sometimes we also see people use personal property trust or land trust. And we're going to talk about the single member LLC towards the end of this seminar. But that is something that we do see. Now, of course, it could be an LLC, in another sense where you're investing into a business. So we do see those, any kind of private offering, private stock. We have clients invested in fast food chains that are private stock. Usually local banks are private stock. I have a couple clients invested in local breweries. Is there any kind of private stock that you're seeing in Atlanta there, Mike?
It's really all over the place. Sometimes it's private stock in an LLC that's going to buy a shopping center or some sort of real estate. Sometimes it's private stock in a local bank that's, generating revenue to open another branch. So it's pretty spread out, the different asset types.
And then we have up here, the next thing is, digital assets, so cryptocurrency. And as you can imagine, we're getting all kinds of phone calls on Bitcoin. And we do talk about Bitcoin in some of our other webinars, so I won't go into it too much, but certainly your IRA can hold cryptocurrency, and there's a process for that. So, we're seeing a couple of people who want to find out how to do that. There's certainly different strategies to use for making those investments, but, of course, that's something that we're hearing a lot about at this time. We also have up here precious metals. And, I know there are ways to invest in the market into, gold and silver through different funds. But when we're talking about precious metals, we mean the tangible gold and silver bars or coins. It can also be platinum or palladium. I mentioned at the very beginning we were talking about things that you can't invest in. And so remember, collectibles was one of them. So if you want to invest in, say, gold coins, you can certainly do that, but you want to make sure that the value is based at what the metal is trading at, and the value isn't, based on it being rare, because then that isn't something you can hold in your IRA. And when you're investing in precious metals, that is something that you have to have a third-party storage facility hold for you. So it's not something you can hold yourself. You don't want to hold your IRA-owned gold coins at home, but rather use a third party to do so. And we have a relationship with a couple depositories, but if you prefer to find one on your own, you can certainly do that. You just want to keep that in mind. I also have up here equipment leasing, and interestingly enough, we've seen people invest in all kinds of different equipment, from farm equipment to ATM machines and large format printers. And so you'll see, again, in that example, that it's really what our clients are deciding or choosing for their IRA. Forex accounts, that's another common investment we see, and it's just very simply because foreign currency platforms, they don't want to hold the IRA itself. They're willing to allow IRAs to make those investments and have that IRA account holder make those trades, but they don't want to be responsible for the IRA reporting. And so what they do instead is direct clients to have a self-directed IRA, and then the self-directed IRA is actually the account holder, and therefore the account holder can go ahead and invest in foreign currency, whether they're trading, buying and holding, or trading by the minute, by the day, by the week. Also, I already mentioned private stock, and then I also have up here commodities and oil and gas, and another couple of investments that we've seen that are not listed up here is mineral and timber rights. We've had clients invest in those items. I've even seen clients buy, raw land and, sell the timber rights to a third party, or have somebody that clears the timber and replants for them. in order to have extra earnings on those investments. And before I go on, is there any other unique investments that you wanted to mention, Mike?
Well, speaking of the timber and raw land, here in Georgia and then next door in Alabama and northern Florida, we do have a lot of land investors where you see them, purchasing the land for the timber or selling the timber to hardwood flooring companies. I've seen people invest, which is typically a loan to the hardwood flooring company for their run, they call it, where they harvest the trees to produce the hardwood flooring, and then the IRAs get a percentage of the profits. So a lot of times you'll also see people with land to pay for the property taxes. They'll put together a hunting lease, and the hunters pay the landowner, the IRA, for the hunting rights, which typically pays the property taxes. So we do see a lot of land transactions here.
We once had a client a couple of years back buy an old orange grove, and they came up with an agreement with a local farmer who was going to harvest the oranges on an annual basis, and they split the proceeds. So, we are seeing clients doing a lot of very creative revenue-generating activities with their IRAs where, somebody might look at, an old orange grove and say, well, there might be upkeep there, but instead, turning it around into a way to have income on that property outside of just appreciation. So there's a lot of unique transactions that we get to experience at Advanta. So we're going to go over some case studies for you to give you an idea of the process and strategy with a self-directed IRA. And I just want to give you an idea of the process because I think 3 times a day I speak to somebody and kind of give them an idea of how it works because, of course, if you've never self-directed your IRA before, you're wondering, how do I get my money over there? How do I make sure that I can make this investment through my IRA? And so Mike and I were here to help you. We also have Scott and Alex in business development right along with us who can help you with those questions. But just to give you an idea, opening an account is very easy. We can do it through DocuSign. It just takes a couple of minutes. We can walk you through completing the forms. And once you hit complete, it comes directly back to us. So we have all the paperwork we need. When you're funding your account, especially with an old employer's plan, it is actually typically something you're going to initiate with them. Now, if you're doing it with an IRA, the process is a little different, but since we're talking about old employers' plans today, I'll kind of give you an idea of how that works. So once your account is open, it's going to generate an account number with Advanta. And what I'm going to do then is make sure you have that account number so that you can take it to the old employer plan or TSP or whatever it might be and give them that information because they're going to want that information and where to mail the check so that they can start the process of the direct rollover. Now, I will tell you sometimes you're going to find that they mail the check directly to you, but it's made out to your IRA, and that's just a part of their process. It's, there's no hiccup there. They just have a process. They want to send it directly to the account holder, and then the account holder will just go ahead and forward it on to us or drop it off at our office, and we'll make sure it gets deposited. Not too often, but we do find with like a TSP, they have forms for us to complete as well. So if you experience that, you just make sure that you get your forms over to us and we can help you complete them and sign them if need be. And then we'll get your account funded. And I'll just briefly mention with a transfer, trustee to trustee transfer, you complete our transfer form and then we actually do initiate it with your current administrator. So we'll send that form over on your behalf and then they'll go ahead and respond with the funds. And then once you have your account open, you can already start looking for that investment and working on the paperwork with us so that once your account is funded, we can go ahead and make that investment in the name of your IRA. And something that is very unique with Advanta is that you will get an account manager. So you're going to work with me or Mike or Alex or Scott to get your account open and funded, and then we're going to go ahead and assign you an account manager who will then be with you for the life of your account on any question you have at all. So if you're logging into your account for the first time and you need somebody to walk you through that, or you had questions on making an annual contribution, all the way through every investment you'll make, that account manager will be there for you. So that person is going to let you know what paperwork we need to see for the investment that you're making, and also where we need your signature in order to make that investment happen. And it's a very easy process, and it's made even easier by the fact that you have somebody there to walk you through each step. So our first case study here is going to be real estate. This is the most common, process for us here at Advanta. We deal with real estate on a daily basis when we're talking about buying, the tangible asset, buying the real estate, buying brick and mortar in an IRA. So John has a former 401k plan with $100,000 and he wants to buy real estate. He can, make the investments that we talked about earlier. Any of those, he's going to let us know what it is that he wants to do, and then get his account open with Advanta. And once he does that, again, we're going to provide him with an account number, and he will provide that to his 401k administrator in order to get the rollover started. When you are buying real estate, you want to make sure that you're going to be titling the property properly in the name of your IRA. So although you are the account owner, the actual buyer of that property is your IRA account. And I always tell people you want to keep in mind that your IRA is more like your business partner. So your business partner is making the investment, so your business partner wants to be titled on the investment. And that being said, once you have a contract, you want to start right away with the contract and have it titled in the name of the IRA. Now, I know sometimes contracts are agreed upon on the weekend and you can't quite remember that wording, and that's okay. What I would suggest, if that's the case, is that you start out by getting an email from one of us or your account manager with the proper titling so that you have that with you in the event your contract is, you're going to go to contract or write an offer on a property. But if you don't, get it as close as possible. Advanta IRA for benefit of John Smith, or Larissa, Advanta IRA in my case for benefit of Larissa Green, so that all we have to do is tweak the name a little bit once the contract is accepted. So that's very important. It's going to be first the administrator's name for benefit of the account holder's name and the account holder's IRA number. Now, if you have a question about anonymity, we can leave your name off of there and just use your account number if you prefer, and that will keep your name off of the property record. Another thing we can do that we've had requests for before is leave the account number off. So it's completely up to you how you want to handle it. But most importantly, we need a way to first call out the administrator, but then also identify that that property is for your IRA specifically. All of the funds for the purchase come from the IRA, so that's very important. Closing costs, all of those costs associated with buying the investment property all come from the IRA. So we will fund the earnest money deposit. If you have a contract on a property, you let your account manager know immediately, hey, I need the earnest money, in 3 days. How do we get that done? We send you the paperwork and make sure that we can go ahead and fund it. So you let us know what closing attorney you're working with or title agency so that we can get it over to them. And then, again, just keep in mind that all of the proceeds, any income related to that property are going back to the IRA tax-free. Now, those funds might be tax deferred to you when you take distributions, depending on the type of account you have, but the IRA itself is not going to pay any taxes. And so you can kind of liken that to holding stock in your IRA. When you hold stock in a 401k or an IRA, you don't even think twice about whether or not you're going to pay taxes on it. So you buy, sell, trade stock, and you're not thinking, hey, I might have to pay taxes on that this year. That's the same exact thing with real estate and an IRA. You don't have to worry about those things. Because when you have a renter, a tenant in place, a renter in place, that rental income is going to be sent directly to Advanta. We're going to deposit it, and that's going to keep it in that tax-sheltered umbrella. And then, if you're rehabbing a property and you sell it, again, income proceeds directly to Advanta IRA in order to keep from paying those capital gains.
And on those expenses, don't forget appraisals, home inspections, a $30 credit pull when you're looking at tenant screening. All those expenses must come directly from the IRA, so you have to be very careful. And another call that I get a lot, that I'm sure you do too, Larissa, is I'm under contract already, and I just found out that I could have used my IRA. Is it too late? And the answer to that question is no, it's not too late. You have to do an amendment to remove yourself and add the real buyer, which is the IRA, and refund any earnest money and then have it issued through the IRA. And then a lot of times you'll see the realtors do a clean contract at the closing. So it's not too late, but it is definitely less of a circus to go ahead and open your account and put at least enough earnest money in there so you can start trying to get a property tied up, so then you know exactly how much money that you're going to need.
That's a good point, because remember, Mike mentioned when he was talking about transfers and rollovers that you can do them as often and whenever you'd like. And so if you're not, if you haven't found that property yet, you're not ready to move over the amount of money you're going to need, or you're not sure what the amount of money you're going to need for the final purchase is going to be, you can move over just what you need for earnest money so that you're ready to go to contract. So that's a good point. We did have a couple of questions pop up here, so let me address those. We had someone ask, can we live in the condo in the future, convert it to non-rental property? If so, would it be treated as a complete distribution based on the fair market value, or must we sell the condo and never be able to live in it? And that's a great question, because remember, I did briefly mention that there are disqualified persons, prohibited transactions when it comes to your IRA. So the answer is, the IRA, if it owns the property at any percentage, you're not allowed to have personal use. And the only strategy that you might talk to a CPA or an ERISA attorney about is if at some point you did want to take that property as a distribution. You're correct. You would have a fair market value, basically a certified appraisal done of that property. Once you reach retirement age, you could take that property as a distribution. You want to keep in mind that it is 1099 income to you in the amount of the distribution. So the IRA is not paying those taxes. So if I had a condo that was worth $200,000 and I had it appraised at $200,000, took it as a distribution, I am going to get a 1099 for $200,000. So that's a personal tax burden to me. And we suggest that you get, advice from an ERISA attorney if you're thinking about doing that, to make sure that the IRS would not have a problem with that. Because if the IRA owns it, you can't have any current benefit from that investment. And before Mike takes over and talks about private lending, just to sum up John's purchase of the IRA, he identified the property. He let us know. So remember, Advanta sells nothing. We have nothing to sell you at all. What we're here to do is help you make that investment in the name of the IRA. So John found the property. He negotiated the price and went to contract in the name of his IRA. The offer was accepted. And just a note on that, the contract isn't official until Advanta signs on behalf of your IRA. So you can negotiate the terms, but at the end of the day, you want to get it over to your account manager so that we can sign it and make that contract official for you. We do ask that you sign it so that we know you've read over it, you've agreed to those terms, but we will sign it for you and then send it over to any parties involved in that closing. Advanta IRA receives the income and pays all of the expenses. That is part of our record-keeping services. So we're going to pay any of the expenses associated with that investment, and that includes after closing. So once that property is closed, if John determines that it needs some inside and outside paint, and he wants to have some landscaping done, he's going to let us know who to pay, and we're going to write those checks on his behalf. And he'll let us know, hey, here's an invoice for the landscaping, please pay so-and-so, and we'll go ahead and do that. Now, he can hire whomever it is that he chooses to hire. He just wants to make sure that it is a non-disqualified third party. So John himself can't do that work, and he's not hiring a family member, essentially, in order to get that work done. And the next question that I usually get with that statement is, what if I don't pay myself or my family member? It's still a prohibited transaction. So you want to make sure that you're hiring non-disqualified third parties for those expenses. In John's case, he determines he's going to rent the property. It's going to be a long-term hold for him, and he finds a renter for $1,000 a month and holds it for 4 years. Essentially, what he has there is a 12% return. John sells the property on year 5 for $150,000 and makes $50,000 of the upside. And now the numbers really aren't important here, but the important part and the message here is that no taxes are paid on the $98,000 in profit realized in the, on this strategy here. We have $48,000 over 4 years in rent, plus the $50,000 earned from the sale of that property. And so now John has $198,000 in his IRA, and he's ready for his next investment. Mike?
So, case study number 2, private lending. So like I said earlier, you've got a big chunk of people that are buying real estate to flip, to hold as rentals, and then you have those people, they don't want to fool around with getting a house under contract or tenant screening. They want to go ahead and loan out of their IRA as a mortgage company. Their IRA holds first lien position a lot of times, so they have collateral, and they're designing the note, which dictates the interest rate that they choose, so they know exactly how fast their IRA is going to grow. So you can see different vehicles, regular mortgages, 15-year, 30-year, construction to perm loans, unsecured loans. You see people acting as a hard money lender with their IRA. And a lot of people at local real estate groups will pool their IRA money together to loan for bigger investments. You have wrap loans, joint venturing. So, case study number 2. John's friend Sam rehabs houses. Sam finds a house to buy for $70,000, and he needs $30,000 for labor and materials to fix it up. So John offers to lend Sam $100,000 from his IRA. Remember, his IRA is the lender, not John. So he offers to loan Sam the $100,000 to buy and fix and flip the house, and John's IRA is going to hold first lien position as a mortgage, just like any typical mortgage company would do. And then on Sam's side, the borrower, he gets a $100,000 loan from John's IRA to buy, fix, and flip the property with no banks involved. The loan terms, 5% interest accrues plus 33% of the profits. Equity participation. You'll see that a lot where your lender, your IRA lender, will have a lower interest rate than, say, if you were to even go to a bank, but yet they're going to want a piece of the profits. So sometimes you'll see a higher interest rate with a low or no equity participation. So it varies, and as the IRA owner, you get to decide. That's another webinar called Be the Bank you can see on our website. So 6 months later, the house sells for $160,000. Okay, so $60,000 more than he purchased it. Sam pays John's IRA back plus $2,500 in interest over those 6 months, plus the 33% of the profits, which is another $20,000. So John's IRA gets $22,500 in 6 months, and the whole time he was secure with the property as collateral in case something, heaven forbid, happened to Sam. So a lot less stress, and Sam still makes $37,500 on a deal with no bank using somebody else's money. Very popular scenario.
And, in this case, we're talking about a first mortgage, but if you're familiar with wrap loans, or you like the idea of a second or third mortgage, again, the investment is completely up to the account holder. So if you're comfortable with a second mortgage, you want to do a wrap loan if you're familiar with that strategy, or even a third mortgage, it's completely up to you. We do have a number of even unsecured notes here at Advanta. So again, remember, we don't give investment advice. So if it's a strategy that you're comfortable with, it's up to you. Now, if you do have a question about the strategy, then I would definitely suggest you talk to an attorney and make sure that this is a good investment for you.
So I know a lot of you have heard of the Checkbook IRA, or what is a Checkbook IRA? Some of you are asking yourselves. Typically, a Checkbook IRA is just an asset in the IRA, just like Apple stock, just like a property, but instead it's an LLC that the IRA owns, and you as the IRA owner is the manager. It gives the IRA owner flexibility to have the IRA funds available to go to auctions and pay rehabbers on the spot. It's very popular with real estate investors. If you're going to be doing tax liens and going to auctions, a lot of times the auctioneer will require a cashier's check made out to you, the winner of the bid, by the end of business that day. So having that local bank account makes it real easy. Otherwise, you would have to order predetermined cashier's checks in advance from your account manager, or in some cases, the auctioneer will allow your IRA to wire funds and you'd be pre-approved for bidding up to a certain number. So it kind of takes the guesswork out of, what's going to be required at the particular auction. But it's basically, you create this company that your IRA owns and you're the manager. You go open a local bank account for the company that your IRA owns and you're the manager, and your IRA invests in that company just like it invests in anything else. And that sends your IRA funds to that local bank account. And now the LLC is the buyer on the contract instead of the IRA. Now you as the manager are doing all the functions that we would normally be doing, or your account manager would normally be doing at Advanta. But the benefit is you're no longer paying Advanta fees, and you do have more control of your funds.
And, that strategy isn't necessarily for everybody. I mean, we oftentimes have people say, well, I'm just not good at record keeping. That might not be a strategy that you want to use then if you're not going to be, you have to be diligent. You have to keep records of every little thing, because should the IRS ever ask you, you want to be able to do what we can do. We can run a statement of your account 1 minute showing everything down to the penny in and out of your account, and it's always linked to a transaction. So 123 Main Street, paid lawn guy, $30. 123 Main Street, paid plumber, $100. So you want to be able to keep those types of records as well, so that if the IRS should ever audit that account, transaction, whatever, that you have those records available to show. So that's very important. And before you go on, Mike, we did have a couple other questions, and I do want to encourage you as we're getting towards the end of this webinar to please type your questions into the chat box, and we'll make sure they get answered. We had a question, does this apply to lease options? Yes, the lease options are something you can do in the IRA. You just need basically paperwork showing a reason for money in and out of the account. Another question I had is on storage units. We do have clients that own storage units. I know there's a few different strategies for that, but essentially, yes, that is an investment you can make in the IRA. If you have questions on the structures of those two types of assets, please give us a call, and we'll go over it with you in more detail. Mike?
Yeah, and another question we had is, can I do stocks and real estate? As Larissa mentioned earlier, we're not a broker-dealer, so if we had your IRA open up a trading account, let's say at Etrade, we'd be charging you custodial administration fees, and so would Etrade. So a lot of times the LLC or the Checkbook IRA is a good tool for not only can you do real estate and mortgages and open a trading account at Etrade, it gives you that flexibility too. I have all this cash building up in my LLC's bank account, and I don't have another property on the horizon right now. It does give you the flexibility to open a trading account, because now your LLC is the investor instead of your IRA, so it makes it more affordable to do it that route. But remember, the LLC is just an extension of the IRA. Same disqualified people, same prohibited transactions. The rules are the same. One of the questions earlier was, I understand I have to pay all my expenses out of my IRA for appraisals and home inspectors and credit pulls. What about my own expenses, gas, mileage? Absolutely cannot ever reimburse yourself. The IRS considers that as a distribution. So that's something that you're going to have to take into consideration.
And further to that point, you are overseeing the real estate investments, but the word managing, the real estate, that's not really the way I would phrase it, I guess I would say. You're overseeing those investments, but you want to keep in mind that all of the income and all of the expenses go through the Advanta IRA account, and that you're not actually providing any sweat equity for those real estate investments. And so, oftentimes people ask me, well, to what extent? What are you allowed to do? What aren't you allowed to do? Well, you can hire vendors. You can make sure that the work is done properly and to your liking before they get paid. But if you're not sure, or you're not sure where you might cross the line, you can always hire a property management company. That is something that you could do. The IRA will pay them. They'll oversee that property for you, and it kind of takes the guesswork out of it as well. So always something to consider.
Yeah, that's a great point. So our final case study. John wants to buy real estate and tax liens at property auctions. John's got $100,000 for these purchases. He needs the money immediately to be able to go to auctions like we just discussed. So he decides to use a checkbook control to make these purchases. He forms Savvy RIA Investor LLC for his IRA, names himself the manager. He directs Advanta to send that LLC bank account the $100,000. There's some compliant forms required, just as if he was buying a property or real estate or doing a mortgage. Same thing. He's investing in an LLC. In this case, his IRA is going to be the single member. And then as the manager, he goes to the auctions and he disperses funds from the bank account to purchase the different tax liens and real estate. And then all of the income goes back into the LLC's bank account. And John, as the manager of the LLC, is now performing all the record keeping and keeping all those records available that we normally would be doing if John was using his IRA to directly invest. So the pros and cons, obviously, as the IRA administrator, with your IRA investing directly and your account manager involved, we are keeping the records and there's arm's length from the funds. Must receive income and pay bills. We're doing all that for the IRA. There's a clear record of all activity. Less likely to engage in a prohibited transaction. That's very important. Something as simple as your IRA purchases a property and you call your State Farm agent and say, I have another property I need homeowners insurance for, and your agent cuts your other personal home a multi-discount, $100 discount. That $100 discount, constitutes a prohibited transaction. So it's important sometimes to have that account manager involved to help you dodge any sort of difficulties. Less likely to engage in a prohibited transaction, your IRA owner must submit forms for checks and investments. So you're more hands-on with your IRA, account manager involved with your day-to-day transactions. With the checkbook IRA, you're out there as the manager, spending and receiving and record keeping. You've got greater freedom. You have less fees. Obviously, you're not paying Advanta any investment fees any longer, as your only asset held in your IRA is the LLC. All of your assets that you're buying with the LLC are held with the LLC. still in that IRA umbrella of tax deferred status. So you also have greater responsibility to keep accurate records. When you're involved with having the checkbook, you're going to need to be keeping the paperwork and copies of checks that you've written and invoices. And like I said, it's easy to make a mistake, so keep that in mind. But you do have quicker access to your funds for auctions. And like I say, a lot of these auctions, it's just like here in GeorgiaAuction.com for their live auctions, you really have to have the checkbook or you're not going to be able to participate. You can in their online auctions because they'll allow you to, fund an online account by a wire, but that can be a hurdle for some people at these different auctions.
Well,
and again, we'll ask you guys to contact us for sure after the webinar ends, and we'll be glad to get into the weeds with any of your specific scenarios you have.
We'll give you a few seconds here to type any last-minute questions into the chat box. Here is our contact information, but as I mentioned, you will also get the recording, and I also did get a request for the slides, so we can provide those along with our email to you. So you'll get both. And I'd like to take a minute just to mention our next webinar. So we appreciate you joining us. The next webinar is going to be a really great one on maximizing your IRA contributions. So if you're not with Advanta, or even if you are, if you're wondering whether or not you're taking advantage of your full contribution, join us April 3rd at noon Eastern Time to find out whether or not you are maximizing your contribution. And that could be in a Roth or a traditional IRA. Those are the most common we see. But of course, if you're self-employed, the SEP, Simple, or 401k, there are different formulas to arrive at the contribution. So we're going to be talking about that again April 3rd, 12 o'clock Eastern Time. We had one more question pop up here before we let you go. Can you do multiple investments, so both stock and real estate? And you certainly can. And as Mike mentioned, you can do that either through an LLC. If you're investing in public stock, your LLC can hold a brokerage firm. You just want to make sure you have your accountant help you with the proper reporting on that, since it's not directly in the name of the IRA. Or this is not an all-or-nothing strategy, so having a portion of your IRA with Advanta, the portion you want to hold real estate, and then continuing on with your brokerage firm with the other portion and making those investments. So with that, I'd like to thank everybody for joining us today. Thanks so much, Mike, for your help with this today, and we'll send out those emails with the recording and slides. Everybody have a great day.